What's up, good people? What's up? What's up? What's up? What's up? How y'all doing this morning? Welcome to Stock Up with Larry Jones. Let's get those likes up. Let's get those likes up this morning. We got CPI coming this morning. You can see my eyes are red. I had that stupid carbon monoxide detector going off, and I thought it was the smoke alarms, and they're all over the house, and I was having irrational thoughts of just taking a hammer and just smashing them all. Man. All right, we got CPI coming up in a second. Let me blow this thing up right here. And let's see what the news gonna be. Of course, the indices are up before CPI. Every single time. It's like clockwork, good people. All right. So I'm going to just go right into it, and we'll discuss right afterwards.
You can start right here. CNBC.
Let's hit those likes. Let's get those likes up. Thank you.
Welcome back to Squawk Box. It is time for the big number, February CPI. I want to get right over to Rick Santelli. Rick.
Yes, of course, we are expecting our February read on the Consumer Price Index headline number, expected to be up 0.4, delivers exactly up 0.4. High watermark here was up 1.3 in June of 22, and that was the highest since 2005. Strip out the all-important food and energy, up 0.5%. This is 1/10 hotter than we were looking for, and it's 1/10 hotter than the rear view mirror. High watermark here up 0.8 in April of 21. That went back to 1981. If we look at year-over-year numbers on headline, expecting up 6%, exactly 6%, and that is well off the 6.4 in the rear view mirror. High watermark 1981. In 1981, it was up 9.1, and that was a 40-year high. If we look at food and energy year over year, up 5.5 as expected, 1/10 lighter than the rear view mirror at 5.6. High watermark here at a percentage, 6.6. That was in September of 22. That went back to 1982. If you look at interest rates, they have moved a bit lower. You look at pre-opening Dow futures, they are going a bit higher. The only fly in the ointment here was the month over month being 1/10 hotter on core. But I think what most people were really paying attention to, Becky, was the year over year core at 5.5. That is indeed good news. When was the last time we had a 5.5? Let's go down the Wayback Machine. To find a smaller number would be November of 21. November of 21 to be smaller than 5.6. And on the 6.4, of course, we know that that's a little bit hotter than we were expecting in the rearview mirror last time. So to get it down to 6%, that was the lightest, going all the way back to September of last year as well. Just by looking at the markets, this isn't going to move huge amounts in the interest rates because it's close to expectations, definitely coming off. One could argue the same argument, maybe not coming off as fast, but I'm very impressed with the year-over-year numbers. Back to you, Becky.
All right, Rick, stay right there. We want to bring in the rest of our panel. Joe Lavorgna joins us on set. He's a former economic advisor in the Trump administration and national economic chief economist. He's now SMBC Nikko Securities America chief economist. Dana Peterson, who is chief economist with the Conference Board. Jason Trennert, who is Strategas Research Partners chairman and CEO, and Steve Leisman. And Steve, why don't you just walk me through, first of all, and tell me what this means from the Fed's perspective? Does this make it more likely, or at least take the pressure off them to raise at this next meeting next week? You think they'll have the ability to sit back and say, we're going to take a pause because inflation's not hotter than expected, and we are concerned about what's happening in the financial system?
I think what the Fed's going to do is roll back Rick Santelli's reporting on the prior two inflation reports, both of which were hotter than expected. And they're going to look and see a nice, calm Rick Santelli today when they see it, and they're going to say, well, at least it wasn't worse than expected. They have a lot of work to do here. They've still got an inflation problem. But I think they'll feel like they have at least some wiggle room in that it was not worse than expected. There's one thing I'm a little, I guess, concerned about here. We'll see what to do with that. But I want to double check my number here. I do see that used cars and trucks, the prices were actually down 2.8%. And There's no other way to follow this issue here than listen to Phil LeBeau, who says that number is rising. So I'm a little concerned that this number did not pick up what's really happening in the economy. Sometimes that happens with a lag with the CPI number. I also noticed, Becky, that your shelter costs, OER, is still at 0.7%. It's a very important expectation at the Fed that this number comes down. It's about a third of the CPI, and it will hopefully come down, and that will be a big part of why the Fed can relax a little bit. I think this number, Becky, just to sum up, because it is not worse than expected, the Fed has the latitude or flexibility to pause if it feels it needs to because of the financial conditions.
All right, we'll come back to shelter in just a moment. But, Joe, let's talk about what you think the Fed should do here.
They should definitely pause when you have a crisis like this, and you could just see based on market price action how much the 2-year notes moved, biggest since '87, how much front-end spreads have moved, biggest since the Greek crisis. The Fed's either eased shortly thereafter or they've paused. In this case, they could pause. They could stop the QT because the QT is draining the bank reserves at a 10-11% rate. That's because right now what's happening is these smaller, medium-sized banks are scrambling for deposits. Wait. See how things evolve. You've got the new forecast. You can still highlight the fact they need to do more. They'll likely need to do more, but just wait. Go 5 weeks, see what happens. You can reevaluate in May.
Dana, how about you?
I think there definitely is a possibility that the Fed will pause next week. This is a crisis in the banking sector, and certainly the Fed doesn't want to do anything to exacerbate it. But I think that even if the Fed does pause next week, they should send a very strong signal that it's not done, that there still needs to be further interest rate hikes to tackle inflation. Inflation is sticky, and it's not coming down as fast as what would be expected.
Jason, if that is what the Fed actually does, and Steve Leason has been telling us that that could be what they do, that they could take a page from what we saw in Europe last time around where they stopped and then came right back on with the Bank of England. If that's the message, as an investor, what do you do? As somebody who's actually putting money to work, is that a sign for risk on again?
Not for very long. I think I would view it as kind of the pause that refreshes, and I would use it as an opportunity to probably de-risk the portfolio, because I agree with the other guests, and I agree with Steve and Rick. I think that there's a decent chance they pause tomorrow, but we're a long way away from the Fed's target. And I also think the Fed is also, we have to remember, is playing a political game here because we're heading into an election year next year. And I don't think they want to have their fingerprints over another bank failure. So there's a lot of things that are coming into play here. And it seems to me that as an investor, you want to de-risk the portfolios because we are getting to the point at which the Fed tightenings are breaking things, as they always do.
So the Fed had to keep raising interest rates until something breaks. Well, the banking system broke, especially regional banks broke. CPI, a year over year, 6.0 versus 6.0. CPI ex food and energy, 0.5 versus 0.4 expected. Core CPI, 5.5 versus 5.5 expected. So pretty much everything that was expected happened. As we could see, the Dow right now and all of the major indices are green. Pre-markets, let's see. Let's go. Let's see where we are. We can look up here. The Dow futures right now, implied openings 234. S&P positive 33 and a NASDAQ positive 92. All right. So will the Feds pause right now? That's the question. Will the Fed pause? Will they take their foot off the pedal? And that is the question that everyone is simply just speculating right now. No one really knows. Would it make sense? Yes, because his job, his focus was to keep his foot on the brakes until something broke. Well, the banking system broke. Now, does he have to remain hawkish to prove his point or to get inflation under control? We will see. You guys know we have tomorrow, we have PPI, and I will be coming on tomorrow live. And if my smoke detectors start to ring again, I'm just gonna rip everyone down in the house like a madman. Oh God. Okay, so the Fed did not break the bank system. Well, because of what's happening, it just proved that it was weak. That's what it is. That's just what it is. And it's so in a way it exposed the banking system. So that's what I'm telling you guys. That did happen. You could word it however you want to word it, but that did happen. But you're right. The Fed didn't break the banking system. The Fed exposed the weakness in the banking system. That CEO, and the way that bank was run broke that system, but it was a ripple effect throughout the regional banks. And so I do like the fact that they saved the depositors. So we can see all of the major indices right there. Let's see. Yep, look at the implied opening. S&P 21 points. So it looks good. Looks good. But I do like the fact that they covered the depositors. So that did work. So for those of you who don't think that they should have covered the depositors, then, I don't know what to say for you, because we got people with jobs that are working. We got startup companies, mainly in fintech, that needed, payroll, that type of deals. So cover the depositors. I agree with that. Investors, sorry, and I think that the CEO of the bank, the CFO, and some of the other board members need to go to court. If you could get in trouble for insider trading, why can't they get in trouble? But this system is created to protect the rich and powerful. And when I mean rich and powerful, I don't mean somebody making $400,000 a year. I mean the ultra rich and the ultra powerful. They never go to jail. They even have a term for them: white collar crimes, meaning blue collar workers, we go to jail. You and I go to jail. They get a smack on the wrist, right? So let's say they do a scandal and it costs $50 million. They get fined $1 million, and they still have $49 million somewhere on an offshore bank. So it's just crazy. And you say, why did that happen? Because they're the ones that fund the people that are making the laws. That's why we're screwed. All right. So good morning, good people. All right. So, yeah, it's poor leadership. Yeah, it's poor leadership. That's what it is. Yep. All right. Good morning. Good morning. Hey, man, I'm going to just keep telling it like it is, until, like Biggie said, until they come and get me. No, I don't want them coming to get me. Good morning. Good morning. So, yeah. Madoff went to jail because he messed up with powerful people's money. Madoff went to jail. Yeah, that's Madoff, right? One. So what? Look at the majority of them that never see a day in jail. You can say what you want to say, just like in a neighborhood. If you got back in the day, if you got caught with a rock cocaine, you get 10 times more time served in jail, a heavier sentence and penalty than somebody selling the powdered cocaine. It's what it is. It's the truth. You can keep your head in the sand if you want to, but these are all truths, people. Some people just love to be lied to. All right, good morning. Good morning. All right, we're going to stick to this because people think that I'm being, yesterday's video, I had one person that said, I sound like I was, whatever. But I'm not. I love everybody. I love everybody. I don't care who you are. And I respect everybody. I love everybody, and I respect everybody. Your belief is your belief. All I was saying is my belief is my belief. All I was saying, if, young men and young women, teach your young men to change the tire. You know, teach your young man not to sit in a car while his woman or his wife pumps the gas. That's all I was saying. Teach a young man to be a young man. That's all I was saying. And I don't understand why people, somebody got mad at me for saying that. I love you. I respect your thing, but it is what it is. All right. So let's keep it going. We're not gonna deal with that anymore. This is like I said. We are a community for everybody, and we are a community that everybody can be themselves, and I'm gonna be me. Yep. Come on, man, Calvin Sloan. It's my show, right? Yep. So that's what's up with that, good people. Let's see where we are. We're 15 minutes in. Let's listen a little bit.
Points yesterday. It was up at 1 point over 30 basis points today. It's up 26. It settled the end of the year at 443. Matter of fact, no maturity is higher in yield than it settled. So 443 for twos, 388 for tens, 397 for 30s. You need to watch these levels. And the second thing is the sample size of our central bank or any central bank actually dealing with inflation. Well, that sample size is quite small. And I think inflation is more like a thermostat issue. When I walk in my house and it's 90 degrees and it's too hot, I want to turn it to 60. It doesn't go from 90 to 60. It goes 90, 89, 88, 87, 86, all the way down till it gets to 50. And I think that's somewhat the way inflation's going to be. And I think this notion of stickiness, well, it might be in certain things like used cars. But then again, between the whole disaster with trying to bring EVs on board, saying you're not going to sell cars after 2035, after the supply chain, the Fed's not going to make any of these cars come back faster or alter that. They need to think about it more like a thermostat and coming down in a gradual way, and maybe then they'll get the strategy right, and they won't have to come back in 2 years and apologize for over-tightening.
I like the thermostat analogy. I want to thank our panel.
Man, that dude is always animated, boy. I bet you he was a whiner when he was a baby. But he's balanced. He speaks what he feels, and a lot of times he's right, whether you want to hear it or not. Right? Michael Jackson. Michael Jackson is in the house, man. Beat it, Michael Jackson. I need you to come and talk to my young men. Hey, man, set it up. I would love to. I mean, I have an extremely heavy schedule, but I'm serious about it. Set it up. Reach out to me and let's make something happen. I'm going to be reaching out to somebody. Someone reached out to me here locally to speak at their school. Again, colleges, get your budget ready, pay me so I can go to these grammar schools. So colleges, I'm charging, right? I'm charging colleges. I'm not charging outrageous fees. Just cover my basic expenses and a little something so I can go to these grammar schools for free, right? So the colleges will fund the grammar schools. I'm dead serious about it. Yeah, that's right. Hey man, I got to keep it 100. I just got to keep it 100. We could stand our ground. We could be who we are in this world of inclusion. I can be who I am, love everybody, and not lose who I am, not lose my identity, not lose my DNA. All right. So it is what it is. What's up, Atlanta? Tony in the house. Yep. Where you at, Michael? Larry, they won't equal. I'm not gonna do that, man. You ain't gonna never see. So like I said, I was, my wife was like, no, Larry, don't do that. I stepped out of the car and y'all better not do this. I saw this beautiful woman pumping gas, and this dude sitting in the car. He had to be maybe 18. He's sitting in the car. Yeah, she out. pumping gas. I knocked on the window. Boop, 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 boop. I'm a James Evan type of dude, man. I was like, come here, man. He was like, yeah, what's up? I said, man, if you don't pump this gas, you got this beautiful woman out here pumping gas in heels and a skirt, and you sitting in the car. Come on, man. He was like, all right. I'm like, come on, player. Really? You gonna let your woman pump the gas? Is that where we are right now? All right, I'm gonna leave that alone. Come on, let's get back to stocks, man. I love y'all, man. I'm gonna leave it right there, man. Listen, we got to start getting things back on track. This is not about, disrespecting anybody else. This is just my beliefs. You have your beliefs. This is just my beliefs, man. It's just, man, it's bad. It's bad out there. All right, hey, but we got good news in the markets, right? Let's go back to the markets. I'm done with that. Let's go back to the markets, good people, because we're here to make money. Everything is looking good. As we could see, Dow is up, S&P up, NASDAQ is up. Are we going to have a good day today? Somebody's like, Chi-Town difference. That's it. That's right. That's right. That's right. You know what I'm saying? It comes a time when you got to put a little bass in your voice. I was like, hey, player. He was like, man, this dude walking up to the car like that? He's like, yeah. That's right. He's just keeping the car warm. Duncan, you wrong, Duncan. Duncan, I better not see you sitting in the backseat of the car and your woman pumping gas. He keeping the car warm. That was a good one, Duncan. So, hey, I'm going to leave it right there before I start rumbling on and get in trouble, y'all. I'm going to just stick to stocks, okay? Tomorrow we got PPI, Producers Price Index. I will be here tomorrow morning, and I will see you later on the day. Let's make sure we get those likes up. Let's make sure that I didn't talk about Moo. Yesterday was Moo Monday. Click the second link below. Get up to 17 free stock. Make sure you read everything. Just by depositing $100, you're getting 7 free stock. So take advantage of that right now. And then, of course, Stock Up You, where a lot of people are learning a lot of things. People say, hey, you shouldn't name it the Ultimate Beginners class because there's a lot of stuff in here that I needed to know. Yesterday, we released yet another class by Stocks with Josh, teaching you and I in simple layman's terms how to read the charts, okay? How to do technical analysis, right? And so then we're going to have a Q&A at the end of all of these chapters to further help you guys going. And then down the road, I'm going to start uploading a few crypto classes for people that really need to understand what's going on. All right. I love each and every one of you guys. You have a blessed day. It doesn't matter who you are. Doesn't matter if you love or hate me. I love you and ain't a thing you can do about it. All right. We'll see you later on today. Live, love, laugh, learn, and earn.